This is Infographic Instant with Brian Michael, and in this episode we'll be looking at the effect of a macroeconomic shock on the Chinese mainland economy and its likely effects on Hong Kong's role as an international financial center. Just to refresh your memory, this series of webcasts is looking at the effect of different shocks on the mainland to the Hong Kong economy through two channels, and that is through real estate channel and through the equities channel. So turning our attention to the infographic, we see that a negative macroeconomic shock on the mainland might have three effects on the Hong Kong economy. The first, as you see by the data which has been presented by Ahuja and Mirvoda in 2012. So the first effect looks at the Shanghai Stock Exchange, and we see that a negative macroeconomic shock would have the most effect on mainland Chinese equities. Turning our attention to the second area, that is the trade channel, specifically through imports and exports. And we see a decrease more on mainland imports than on exports. And of course this would have an effect on Hong Kong's trading sector. Shipping is a particularly important sector touched here. The third area of the infographic I draw your attention to are manufacturing and production in manufactured exports, secondary industry, and tertiary industry. And we see that the effects there are far less than the effect on equities, but nonetheless relevant for many mainland companies which are listed on the Hong Kong Stock Exchange. So we see that these three effects combined would certainly have effects not only on our equity markets but also on consumption in Hong Kong. So that's all for this webcast, and this is Brian Michael with Infographic Instant.